Hello and welcome to Rising Stars. I'm the promoter. Now, notwithstanding all the liquidity in the markets currently, for the number of SMEs we have that are actively seeking financing, the idea to service their needs seems like a good one at the outset, but there is enough competition in that business. Now, OfBusiness is this startup that's into offering business credit. They want to expand their offerings to bill discounting. They want to get into project financing. But for the moment, for the most part of the business, it all comes from raw material financing. Let's find out more about their past, their present, and indeed what their future is looking like from the CEO and co-founder of the business, OfBusiness, Asish Mohapatra. Welcome to Rising Stars. Such a pleasure having you.
Thanks for having me here.
Ashish, do tell us about your business. You've concentrated on raw material financing. How did you decide to go this route when you set up in February 2016?
Okay, when we started off, Vikram, the idea was to always concentrate on the SME segment because we always thought that that was a part of the market that was completely underserved. See, because if you look at traditional banking and non-banking channels in India, they are either focused on corporate lending or they are focused on retail lending. SMEs have always been the forgotten segment in some ways, right? It's very, very difficult to reach them. It's not cost effective to reach them. It's difficult to make money out of and stuff like that. So we thought that that's one part of the economy that is really underserved and requires some attention. So we started off with SMEs,
right,
and have always been true to our first love, which is the SMEs. Now, the biggest problem in SMEs, if you look at it from a historical standpoint towards financing, and financing is the single largest need of SMEs by a distance, has been the fact that the financier actually finds it very difficult to control the end user funds. So you fund the SME for one reason.
Where they are using the money.
That's right. That's right. So if you fund the SME for one reason, they would typically go and use it for somewhere else. And you really, as a financier, do not have control over it. And the end user funds actually gives you a lot of control, because if the guy is actually using it in his business, he is more than probable to actually return back the money to you, right?
Sure.
Rather than consuming it for something else.
Right.
So the idea that we had was that if you look at SMEs in particular, close to about 60 to 70% of the revenue is actually spent in material financing, and about, I would say, 80 to 90% of that is in raw material financing.
This is across sectors, really, Ashish?
Yes.
Yeah.
So while we are across sectors and traditionally want to be in those sectors which are, SME bellwethers in some ways, we are concentrated, I would say, in 3 to 4 sectors today.
Which would be?
Which would be a combination of auto and auto ancillaries, meaning SMEs who would manufacture for the big auto giants like, let's say, Bajaj Auto, Hero FinCorp, Maruti and stuff like that. Second would be infrastructure contractor services, guys who would take up installation and manufacturing services for L&T and stuff like that.
Sure.
The third would be capital equipments, right? So those are the 3 sectors where we have a bulk of our lending.
So this sounds good at the outset, because there is so much financing that is available otherwise to SMEs, and of course it's always dicey, right? Because you look at your NBFCs, you look at all these people who are out lending the money, and their NPA positions is always looking like it's in a mess. But how have you safeguarded? You've gone down this niche, but as far as the business, about 9 odd months or so since you started, how's it been looking? I mean, how is the NPA situation? How many borrowers do you have at this point in time? How much have you lent into the market?
Okay, so see, first of all, the fact that SMEs have a lot of financing options available is not really true. So if you look at traditional banking and non-BFC and non-banking financial channels, they would, I think, be about 5% of really the SMEs needs. So close to about 95% of the SME needs actually comes from the informal channel, meaning that suppliers actually fund them.
Right.
Now the funding is obviously not free, it comes at a high cost, and these financiers have a lot of control over the SMEs. They essentially are guys who are placed in that micro market, and typically that would come at a cost of 2% plus. Okay, so if you look at the NPA position, which was your specific question, the banks and the NBFCs have a tough time lending to SMEs. Right?
Why is that?
The reason is, one is, as I told you, guaranteed end user funds, so they don't really know where the SME will use it. That's one. And two is that there are not real channels for them to go and access these SMEs. So hence they would tend to actually go down and lend to the ones that they know, or the ones that are probably the larger ones among the SMEs. These guys probably have a, I would say, industry average of about 3 to 4% when it comes to NPAs.
Right.
Whereas the traditional financier, the supplier who actually takes a lot of unsecured exposure on the SME, would have very, very low exposures. Why? Because he would have physical control, he would have trust relations built over decades of partnership and relationships.
So you are somewhere in the middle, right, Ashish, with that kind of business. So do tell us now, where do things stand as far as your own NPA situation is concerned,
Yes.
considering that this market is not going to get settled anytime soon, but the higher the risk, the higher the gains as well. Is that turning out to be the play over here? And have you seen those kind of rewards coming?
Yeah, I think we have been sub 1% right from the outset, and in fact as we have increased our scale and got deeper into our clusters, our NPAs have come down over a period of time. We are today somewhere in the range of 0.6 to 1%. Okay, and consistently if you pick out any parts of our loan portfolio, you would see that that number actually is somewhere in the 0.75% range or so, which is actually, predominantly lower considering the 1% average that
So how have you been able to
plus.
control that, Ashish? Because this is a difficult piece. So how have you been able to control this, Ashish? Because it's a difficult piece to manage. As far as technology goes, it can indeed help, and I believe that you have spent a significant part of the money that you've raised, which is close to 110 crore rupees totally, into your technology piece to ensure that the kind of loans that you disburse are the kind that you can recover.
Yeah. So I think there are two parts to the puzzle of how we control NPS. The first part of the puzzle is really in the business model. See, we do not give out money to the SMEs. We don't even intend to. We actually give them raw material. Now, if we give them raw material in exchange of financing, what happens is they would typically use that in business, and hence the returns from the business are used to pay back for the raw material. So the fact that we give out raw material actually makes sure that, guaranteed end user funds are there. The second part is that typically we give out limits for a SME to use. So the disbursal of the limit typically does not happen in one go.
Right.
So as and when he needs raw material, he comes to you. And because the raw material is also aggregated by us, it is not that we just would go and pay to the supplier of the SME. We would actually aggregate on the platform and then place it on a manufacturer. The SME also finds it cheap.
Right.
The raw material is also cheaper on our platform compared to what the SME would typically buy if he is buying standalone.
Right.
And hence he typically comes back to, buy the raw material time and over again.
Sure.
As he buys a lot of these raw materials, and that too frequently, he would have to pay back for his old loans, and hence because of the business model effect, what happens is that NPAs are under control.
That's right. Right.
And hence you would see a sub 1%, which would actually be a best in class for even a corporate kind of
which is great.
structure.
But also tell me about the kind of revenues right now, because there is the interest money. So how competitive are your interest rates to start with? And also because of the aggregation nature of your business that you're talking about, there are certain revenues that you gain from that too. So how does that work?
Okay, see, raw material is a thin margin business. We typically, I would say, save about 2 to 3% of the channel margin when it comes to aggregation.
Okay.
We would pass off about 50% of that to the SME and keep about 50% for ourselves. That's on the product margin side.
Right.
The second part is the interest margin. The interest margin, the ones we compete with are not really the banks and the NBFCs. We compete with the traditional channels, which are the suppliers. They typically charge a 2% plus. Our interest margins would be about 1.5% per month, which is about 25% lower for the SME, in addition to the processing fee that we would charge, which is nominal to just cover our costs.
But what about the competitive landscape? Because like I said, it is going to get significantly busy with more and more NBFCs looking at this entire market. Yes, absolutely. So then how do you stay ahead of the curve? Because right now your funding situation seems to be sorted. You've had 2 rounds of funding, and I believe there is a Series C that you're looking at as well. And how much are you trying to raise through that?
About 25 million or so.
Another $25 million is what you're hoping. In equity, absolutely. So how are you planning to use these funds, considering that you have to stay ahead of the curve? Your marketing expenses you've managed to keep low, but acquisition of clientele is also going to be an ongoing piece.
Yes. See, the big part of what we do is essentially in the use of technology. If you look at our current workforce, about 150, roughly about, I would say, 40 to 45% of our workforce is deployed in technology. We use technology in 3 ways, and they would be different from what you would have seen in the industry. One is we actually do acquire our SMEs online when they, because of the sectors that we are present in, these are guys who actually win tenders, right? So when they win tenders, during the act of bidding for tenders is when we catch them by actually scraping most of the tender data that is published online. This is close to about, I would say, 1500 to 1600 websites have about 13 to 14,000 tenders that are published per day. We catch them while they are bidding for these tenders.
That's how you capture them.
Yes, and it is a humongous effort to not only standardize these tenders, but also actually build a database of who is bidding for what tenders and who is winning,
Sure.
and what kind of strategy he is actually using to bid for these tenders, and
Yes.
that becomes an acquisition tool for us.
Right.
Apart from that, I think a lot of what we do also requires a lot of investment in technology, which is in the form of underwriting. We actually are building proprietary databases which tell us SMEs in particular sectors how capital efficient and how capital intensive they are,
Right.
in terms of to define something called operating credit. I think that's what how we are different both in acquisition and underwriting.
Yes.
And this is what will take a lot of significant investment going forward.
Right.
Because fundamentally financing, by actually being competitive, because it is high cost to the SME,
Of course.
to what his substitute options are, we don't burn too much.
Right.
The real investment is in technology, so that we really create efficiency for both our customers as well as for us.
Absolutely, and maintaining those NPAs at the kind of levels that you have been able to, that's going to be key as well. So
That's
good
right.
luck on the path ahead. It's a pleasure talking to you on Rising Stars, and of course we hope to check in with you to see how the business is faring in the future as well. So good luck.
Thanks for having us.
Ashish Mohapatra, founder and CEO of OfBusiness, and there'll be plenty more here on the show as far as young entrepreneurs go. Thanks for joining us for the moment.